Welcome to this interview at the Risk Management Trading Conference 2023. I'm Gerardo Herrera, Communication Director of RiskMathics, and I'm thrilled to have with us Adam Passaglia, a seasoned trader, very experienced practitioner of financial markets, especially in Europe. I guess the first question for our audience to know you, Adam, is if you can tell us about your career. Who is Adam Passaglia, the trader, the successful trader?
Great. Thanks for having me too here. So, my trading career, I started looking at financial markets when I was a young kid, probably 10, 11 years old, looking at the numbers in the newspaper and following them. And I knew I loved that. And then I went to university, and all I did was study agricultural commodities in university. Every class I took was towards options and cost of carry and everything for those commodities. And then when I was in university, I got a job working at the floor of the Eurodollar options, Eurodollar pit specifically, in the CME. And I was 19 years old and sitting there and just feeling the energy and excitement for the markets was riveting to me, and I loved it, and I was hooked. And so at that age, I would sit there in the pit and I would day trade it. And the head trader said to me, "Hey, he offered me a $50,000 a year job to leave school and come be a trader." And I was stoked. I was like, all right, Dad, this sounds awesome. My parents did not think so. And so they made me go back to university. But this is getting into the .com era, right? And so I went back to university and started trading electronic for the first time in the stocks and equities at that time. It was all the big .com ones coming up. And then upon graduation, I was looking for a job, and electronic markets were not in the CME and CBOT in Chicago, where I'm from, but Eurex had it. And so I had other job offers of like on the floor of the CBOE and that type of thing. But I took the job working that got me to the fastest point of trading. So I passed exams and I was trading within a month of graduation from university. And then trading from Chicago, I started trading a product called the Euro stocks. They wanted me to trade the DAX, but then I found this product that was just starting up, was the Euro stocks, and quickly caught on to it and traded about 5-10% of the volume in that product in a short amount of time. Trained a bunch of people on it, but then trading it from Chicago was problematic because of technology at that time. So I moved to Frankfurt, Germany to get closer to the servers for technology, for speed purposes. Then in Germany, similar to the pits of Chicago, it was a great community, great energy in there at that time in the early 2000s. Was trading it every day then. Eurostock just focused on that growth of that product. Moved back to Chicago, because technology got a little better. So I moved back to Chicago, built the fastest line possible to my Chicago office, and just concentrated on it. And while in Chicago, I went 3.5 years straight making positive days every single day. And it was based on my approach to risk, right? And so my whole approach to risk was to minimize exposure, never take too big of a chance, never go for that real big home run, just go for singles, doubles, triples, that type of thing. And within there, I found a lot of opportunities too. If I started a day negative quite a bit, I wouldn't double my size to get it back. I would actually lower my size and fight to get it back. So that's kind of my approach to risk, my approach to trading. And I continued to trade the Euro stocks then for the next decade, and Euro stocks, DAX, and a little bit of boom bubble shots. So just Eurex was my primary product. And then about mid 2014, 13 or so, stepped back from trading to grow the trading business, right? I ended up training a lot of people in my day, but I knew that it was what it took to be a great trader is like a professional athlete. Like you have to bring your all every day, all day. And you got to mentally be there at all times. And it wore on you over time, especially that level that I went to. So I stepped back and started the trading business, merged my company with my partner, Amnon, up in Montreal. And we both stepped back from trading and just concentrated on growing it. And then we've gone and found traders all over the world. We trade maybe 30, 40 different exchanges. We trade futures, we trade options on futures, we trade equities, trade cash treasuries, we trade FX, we trade crypto, whatever it is. And then we also trade whatever style, right? We have click trading, and then we have microwave lines even. So we go through that whole, we have algos, we have trend following, whatever it is, we have it really. And we trade every different asset class also. So I don't know if that answered fully.
Yeah, well, but absolutely a great career. Now let's jump to the present day. You built your career on derivatives. Derivatives is one of those investments that hedge funds prefer. It's kind of a synonym, hedge funds and derivatives. Hedge funds have not been common in Mexico because of regulatory instances, and Mexico is undergoing right now process of change in the securities law that could trigger the emergence of a heavy, robust hedge fund industry. At the same time, hedge funds out there in the US and Europe have had kind of a bad image. They have this image that they take advantage of ailing companies. Short selling is associated with them. What is the reality behind this media conception?
So I view hedge funds as portfolio managers, and traders and portfolio managers are the same thing. And that business, those people, they're there when the crap hits the fan. They're the ones stepping into the market. They're the ones providing liquidity when there is no liquidity. So I understand the perception, but especially where I come from, which is the derivative side of things, we're providing the liquidity. We're helping the marketplace. And one of the panels I'm on here this week is going to talk about that, where the hedge funds actually can really help grow the industry, can grow the business, right? If let's say you start a hedge fund here trading the Mexican exchange, and we create a hedge fund for you for it. Hedge fund is just, it's a name, it's fund really, right? So it would be opening up the exposure for that for investors worldwide. So you'd be bringing in money from the outside to invest into Mexico, right? So it's adding exposure to those marketplaces so that grows the product. And then once that product starts growing, right, then you have retail investors and other type of investors that can come into it as well. So there's a lot of ways that it can really help, and it's a great investment tool, right? I mean, go back to 2021, where everyone lost money in their stock market. The derivatives did great, right? It was a good diversification. And a lot of people don't realize that they need that diversification in their portfolio, right? They're well underinvested in derivatives. So I think that as people understand it and as it matures, it'll help investors. It'll give them a more well-rounded, diversified portfolio, which is really, that's what we're looking for on the prop side, right? We have all those traders spread out all over the world. We're looking for a nice, diversified. Sometimes, commodities are up and equities are down. Sometimes interest rates are up. So, that helps with the smoothing out process.
Okay. So all in all, it's not a zero-sum game with hedge funds.
Well, I mean, futures are zero sum, right? But they're providing, look at the futures, you have all the major companies using derivatives to hedge their products. So it's zero sum, but it's the airlines, right? That I read that Southwest Airlines has just started hedging for the first time in a long time, $1 billion worth of fuel, right? So they're hedging, and that's creating more opportunity within the marketplace. And is it zero sum? Yeah, it's zero sum, but it's providing a valuable need for big industry.
You just mentioned derivatives, who had a good run for the last 2-3 years during the crisis. Right now, the situation seems to be normalizing in terms of trading. What is your perspective going forward? What happened in the last 2-3 years was a seasonal rally, or derivatives jumped to a new level?
Yeah, there's always peaks and valleys in terms of trading, all products, all asset classes, right? I mean, the commodities had such a bad run of it from 16 to really COVID hit. You know, those traders, those markets, it was difficult times. And I believe that because of inflation, right? Because inflation holding at these levels, the commodities are going to continue to be fluctuating and move, and there's going to be events, and really a big factor is also global warming, and with these weather changes that are happening, there's going to be drastic changes. So in terms of commodities, agricultural commodities and that, I expect, yeah, you might get lulls. There's lulls. Like right now, of course, there's a lull after, you know, the Russia invasion with wheat spiking all over the place, and then how wheat affects all the other prices. Yeah, there's going to be a calming a little bit. There has to be at some point. It can't be crazy all the time. Even Bitcoin, right? I mean, you had crazy and then it calmed, right? So each one goes through those cycles, and there'll be events that spark it that, you know, I can't foresee what it's going to be, but each event that will create volatility in those products, I think. But there will be lulls. There will be lulls. And that's what I tell my traders and portfolio managers too, is there's going to be those lulls. You got to survive those lulls and be ready and be in there for when that opportunity presents itself.
Now that you mentioned commodities, for Latin American countries, there are two asset classes that are particularly sensitive: commodities and foreign exchange. Mm-hmm. So what is your perspective? You already mentioned commodities. What is your perspective on derivatives on FX?
So we have a couple hedge funds that are in the FX space, and let me first start. I will always defer to the smarter people that I hire to give a better answer on this, that focus on it every day, like how I focused on those Euro stocks every day, and that's all I did. So my perspective would just be on a bigger picture thing from what I see internationally. And you have turmoil all over the globe, and that'll continue to happen. And so from an FX perspective, I see them moving. It has really consolidated though in the last year or so, right? The foreign currency has, but I same as the other, there's no difference between foreign currency and the commodities and Bitcoin or equities. There'll be those lulls, and then there'll be events that happen where they come. But did you want me to go further into anything?
That's good.
Okay, all right.
And finally, given all these perspectives that we keep learning, every time that we think that we have finally measured how something is going to behave, there comes something that changes the whole scenario. And that's been the story for the last 4 years.
Yeah.
How important is education and continuous actualization for professionals in the financial market?
Oh, yeah. I mean, education is key. It really is. We do a lot of training, right? It's tough to train in the US because of cost structure and everything. We do a lot of training in India, in Eastern Europe, And we go through a very thorough training process to get them involved. And then we do upkeep with our traders all the time, quarterly, and educating them and having them continue to move forward. It's probably the most important thing is that educational side of it, to really understand what is going on in each of those markets and know that you can lose a lot, right? There's a lot of potential losses there if you're not well educated enough. So it's a continual process. It never stops. It doesn't stop for me. It doesn't stop for anyone.
Okay, perfect. Thank you very much, Adam, for your thoughts and ideas.
Thank you to whole RiskMathics for having me here. Appreciate it. Thank you.